Hello and welcome back to our channel, the best place for a happy, healthy and wealthy living. In today's video, we are going to discuss the 7 different types of income streams which the rich or the billionaires have. But before we proceed, let's take a quick stock of what we have discussed so far. We started with the basic finance for personal finance management. We then discussed the 3 cash flow patterns of the poor, the middle class and the rich. In the last video, we discussed the different aspects of personal finance and how to graduate from the cash flow pattern of the poor to the rich. In particular, we started with the important aspect of personal finance, which is how to effectively manage our expenses. In today's video, we are going to continue by discussing the second important aspect of personal finance, which is how to effectively manage our income or grow our income, and in particular, how to acquire the different income streams which the rich or millionaires have. So if you want to build this income stream, and if you want to know how to go about building these income streams, please watch on till the end, because I'm going to share some important tips on how we can go about doing this. So let's begin. If you look and compare the sources of income or the income streams of the poor and the rich, you would notice 2 important differences. The first is the rich typically have multiple sources of income. That is, they'll have at least more than one source of income, whereas the poor typically have only one source of income. The second important difference you would notice is the income streams of the rich, even if they have only one, would always be what is known as passive income, whereas the one income stream of the poor typically will be inactive income. So what is an active income and what is a passive income? An active income is an income which you earn by trading your time for money. For example, your salary or your wages. In this type of income, the amount of money or income which you receive is directly proportionate to the amount of time you put in. On the other hand, a passive income is an income which you earn without directly working for it. For example, your interest income or your rental income. So this type of income, the passive income, typically comes from your investments or from the assets which you have created. So let us now take a deeper dive into each of these 7 income streams of the rich or millionaires. In particular, we'll cover 4 important aspects of each of these income streams. First, we'll try and understand what each income stream is. Second, how active or how passive they are. Thirdly, how tax efficient they are, or how much tax do we need to pay on each of these income streams. And last but not the least, what are the pros and cons, or how easy or how difficult it is to build each of these income streams. So our first income stream is what is known as earned income. This is the type of income which you earn by spending or trading your time. For example, the salary or the wage which you get by working for somebody or working for a company. 3-4 important aspects of earned income are: 1. It's a highly active income because you have to regularly trade your time or spend your time to earn this type of income. Second is the most basic form of income, and it's usually the starting point because after your college, once you get a job, the first type of income which you earn is your salary or earned income, unless of course you start your own business. So the 4th important aspect of earned income is that it's one of the highest tax source of income. I'm sure all of us are familiar with the personal income tax slabs, which starts from 5% and goes up as the income increases. But currently, for incomes above 15 lakhs per annum, you have to pay a tax of 30%. So the tax rate is the highest for this particular type of income. So given that this income is highly active and highly taxed, many people tend to brand this income as a bad income. But it's not necessarily so, because we all have to start somewhere, and earned income typically is a good starting point. But what is bad though is staying on with only this type of income for a long time. Because as Warren Buffett puts it, if we don't find a way to make money while we sleep, we will have to work until we die. What is bad per se, therefore, is not the income, but staying on with only this type of income and not building other or multiple sources of income over time, because otherwise we'll have to continuously and regularly trade our time for this type of income. The second type of income is what is known as interest income. This is the kind of income which you get by lending money to others, to the bank, to the companies, or even to the government. This could be done through putting money in saving deposits, fixed deposit, buying bonds, or government bills, which we shall discuss in detail in our video on investments. There are 2-3 important aspects of interest income. First, it's a good passive income because typically you don't have to actively manage this type of income or investments, and they are also usually relatively less riskier than many other investments. Secondly, although interest income for shorter term investments is also taxed at your personal tax slab rates, but for longer term investments, currently interest income is taxed at about 20% with indexation. Indexation simply means the government allows you to reduce the income on which you have to pay tax by a certain amount to help you set off against the overall economic inflation. So the tax rate for interest income, usually for a longer term, is much lower than earned income. The third and an important aspect of interest income is that you can start earning this type of income with minimal investments. You don't need big amount. With a few thousand rupees, you can start putting in fixed deposit or start buying bonds and start earning this type of income. The third type of income is what is known as rental income. And this is a type of income which you earn by renting an asset, which could be a real estate asset, a residential building or a commercial building. It could be an equipment or a vehicle. And although this income also is taxed at your personal tax slab rate, the government currently allows you a standard deduction of 30% of your rental income. Besides that, you are also allowed deductions for property taxes or even interest if you actually bought that asset on a loan. So in effect, you end up paying a much lower tax rate than earned income. So rental income is a relatively passive and relatively tax efficient income source. But one challenge with this income source is you need a sizable amount of money to acquire these assets to start generating rental income. The fourth type of income is what is known as royalty income. And this is the kind of income which you get by letting people use your products, your ideas, or even your processes. There are lots of examples for this type of income, but one example we are all familiar with is Harry Potter. Every time somebody buys a Harry Potter book or watches a movie or buys a toy, J.K. Rowling gets a royalty income, which means she gets a certain part of that sale or revenue. And that has made her, as we all know today, one of the richest billionaires in UK from somebody who didn't have enough money and used to write in coffee shops. But there are lots of other examples. For example, a movie on Netflix, a song on iTunes, or writing a book. Every time somebody watches your movie or buys your book or downloads your song on iTunes, you'll get a certain share of that revenue as royalty income. Royalty income is a highly passive income because once you have created the asset, that royalty income will continuously come without you having to put in any more or much more further efforts. And currently it's taxed at your income tax slab rate, but the government allows you a deduction of up to 3 lakhs per annum. So this is a highly desirable passive income. But one challenge is you first need to have that special skill to first create this kind of assets. But once you do manage to create this kind of assets which can give you royalty income, the amount of money you can make is limitless, which is why royalty income has made many people millionaires or billionaires. The next 2 types of incomes which the rich or the millionaires have, which we are going to discuss, are what is known as dividend income and capital gains income. And since these 2 types of incomes are closely linked, we're going to discuss them together. This type of income, both the dividend income and capital gains income, come typically from investing in the stock market or buying shares. Although we will discuss in detail in a separate video on investing in the stock markets, one thing we need to know for now is that there are 2 types of income which you get from investing in the stock market or investing in shares. The first income is as and when the company makes a profit on a quarterly or on a yearly basis, they might decide to share a certain share of that profit with the shareholders, and they distribute it to the shareholders in the form of dividend income. And as and when you decide to sell the shares in the company, hopefully you might sell it at a higher price than what you have bought. And that increase in value of the shares or that increase in value of investment which you have achieved is what is known as capital gains income. And although this also is a good passive income, but as compared to other passive incomes like royalty income, you might have to be more actively involved to continuously track the performance of your shares to decide when to buy, when to sell, depending on the overall performance of a particular company in whose shares you have invested. According to the recent budget, you now need to pay tax on your dividend income at your individual tax slab rate. But for capital gains, the taxation is still very efficient compared to the other sources of income. For example, if you hold the shares and sell it before the end of 1 year, you need to pay pay a short-term capital gains tax, which is currently at about 15%. But if you hold the shares longer and sell it after 1 year, then you need to pay the long-term capital gains tax, which is currently at about 10%. So dividend income and capital gains income are good incomes to have because they are passive in nature, they are tax efficient, and they can also be acquired with minimal investments. You don't need huge amount of money to start earning this type of income. But one important prerequisite to successfully earn this type of income is to have the right financial knowledge and skill set to be able to assess which companies to invest in, which sectors to invest in, and when is the right time to invest, and probably when is the right time to exit or sell your investments. The last and one of the important sources of income of millionaires or the rich is what is known as business income. Business income, or sometimes also known as profit income, is a kind of income which you earn by running a business. So for earning this type of income, you need to become an entrepreneur and start a business. One or two things about the business income. One, it's going to be a highly active income, at least at the initial stages of starting the business or setting up a company. It may become passive later on as and when the business is established and you have set up a competent team to run the business without your active involvement. The tax on business income after the recent budget has come down to about 22%, much lower than earned income or many of the other incomes. So business income is one of the best sources of income and probably one of the most common income source for millionaires and the rich. And of course, once you have set up a business, the amount of income you can earn is limitless. But one important factor or one challenge is to earn this type of income requires a different aptitude and a different kind of risk-taking capability to operate and successfully run a business. So we have now discussed the 7 different income streams of the rich or millionaires. Before we conclude, let's quickly discuss how we can go about building these different income streams. The first point is you don't need all the 7 income streams to become rich or become a millionaire. For example, let's look at Warren Buffett, biggest investor in the world. He has mainly 2 income streams, which is dividend income and capital gains income. Or Bill Gates, another richest billionaire in the world. His 2 main income streams are business income and royalty income. So we don't need multiple sources of income. We can also become rich or billionaire with 1 or 2 sources of income. But those income sources has to be the other form of incomes and not the earned income. The second important point is how do we go about building or adding on these multiple sources of income? If you again look at all the millionaires and the billionaires, typically they start with one source of income and add on the other sources of income as they progress. So we should typically start with one source of income, which could be our salary. The goal here would be to create as much value or to offer as much value in that particular income stream. We should work towards increasing our salary as much as possible by making ourselves more valuable to the company or the organization we work with. And as we are discussing the cash flow pattern of the rich, we should start using that surplus cash or income to start investing in other asset class to generate other sources of income. But as we have discussed in this video, each of these specific asset class requires certain skill set and knowledge to be able to effectively invest and earn that kind of income. So we should cautiously approach or cautiously expand and spend as much time to understand each asset class and gain the knowledge before we actually add on other sources of income. Hope you find this video helpful. If you do, please like the video and leave your comment and feedback below. Do subscribe to our channel and hit the notification button for regular updates on personal finance. Thank you for watching. Have a good day.